So according to longtermcare.gov, somebody turning 65 today is going to have a 70% chance of needing long-term care at some level. And of that 70%, 20% of them may need it for 5 years or more. Now, if you're like me, you're probably thinking, I'm going to be in that 30% that's not going to need it. But if you did, what is the right way to tackle it? Today, we're going to be talking about long-term care, and we're going to be talking about traditional versus hybrid long-term care. In the world of long-term care, there's been many changes. A lot of companies or insurance carriers stopped offering products because what happened was when these products initially came out like 30 years ago, they didn't understand the marketplace and they didn't understand the actual cost of what long-term care was going to incur for people. The insurance companies assume that a lot of people just would end up not needing these policies. So early on, they sold these really robust policies that had all sorts of features and benefits and paid really good stuff and helped people if they ever got into a long-term care situation. You might be thinking, well, what does that actually mean if I'm in a long-term care situation? What we're talking about is the need for some sort of extended health care, right? If you need help getting changed or going to the bathroom or feeding yourself, all of these things where somebody might need to come in and help you or do things around the house for you, that's what long-term care is. And you may know somebody at home, maybe a relative or family member, somebody that has gone through a long-term care situation. Maybe there's been a cognitive decline or something of this nature. And you're thinking, well, what is the best way to protect myself? What's the best way to protect my family so that I'm not a burden on my children or grandchildren? What's the best way to handle this? Because there's been so many changes and carriers doing different things in the marketplace, there's actually today more options than there were previously. Something called traditional long-term care, that's usually how it's going to be referred to in the marketplace, is long-term care insurance that I like to think about like, term life insurance. It's going to be the least expensive way to do it from an out-of-pocket standpoint in today's dollars. The challenge that we have with traditional long-term care insurance is that you have to pay it every month or every year. And if you don't pay it, the benefits go away. So if you live a long, happy life, you get what you want and you never need to use this policy, the insurance company actually wins. They actually get to keep all that money and get to keep all of those premiums. If something does happen, they're going to pay you a benefit based on however much you purchased, right? You purchase basically a benefit pool, and that pool will last for a certain number of years. What's nice about traditional long-term care insurance, again, is the premiums are generally lower than any other way to do long-term care insurance. But again, the downfall to that is if I don't use it, I lose it. Now, when looking at hybrid type of long-term care insurance, really what we're talking about here is how do we incorporate life insurance and long-term care insurance on the same policy so that this is a policy that no matter what, somebody is getting a benefit. There's a couple different ways to do that, and what we see is generally for people that are younger in age, we will do a rider on top of their regular permanent life insurance. Right? That could be an IUL, it could be a whole life policy. Actually, even some carriers do it on term policies where they're going to give you either a long-term care or a critical care type benefit that will take care of you should one of these situations arise. The nice thing about doing it in that manner is you're basically just paying for a little extra for a rider. Some carriers even include it inside of the base premium. So really, you're just paying for the life insurance, which you already needed and wanted to protect your family. And you're getting this added bonus of having access to that death benefit early in case long-term care arises for you. The other way to do it is with a single premium, a lump sum of dollars that we put into a policy. There's a couple different ways that this is structured today, but generally it was just, hey, I make one premium payment in, and now I have a long-term care benefit, I have a death benefit, and depending on the company or carrier, the way it's set up, I might even have growth inside that policy. So the dollars that I put in, I still have access to, and I can use for whatever I want to use them for. But you may be thinking, hey, I like that idea, but I don't have a lump sum of dollars. I can't pay this all in 1 year. Companies have come out now with the ability to pay these over 3 years, 5 years, 7 years, even 10 and 12 years, right? So really depending on your situation, where you are in your course of life and the type of planning you want to do, what we can do is we can sit down and help you design the right long-term care plan to protect you and your family and make sure that your wealth is not taken over by this long-term care situation. Because I've seen all too often where all the work that you've done to accumulate your wealth ends up going to nursing facilities, caregivers, and all that sort of stuff. And then there's really not a lot left to leave to your family. Long-term care is an important part of financial planning and protection for you and your family. If you'd like to get more information on this, click the link below. One of our team members will reach out to you and we can actually help walk you through what's the right type of plan for you.